The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And we're going to give you the latest lowdown on what's happening regarding your finances and your taxes, and how to reduce your tax liability, and how to gain asset value and appreciation in your finances by minimizing tax bites and making good decisions. So that's what our show's all about. I'm Esther Gulius, the Tax Lady. Our website is found at egtax.com. I'm joined in studio, of course, like every week, with Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday to you too, and Christopher Fabian.
Hello, Esther.
I'm good, and I'm on the mend. I told everybody I broke my hip playing pickleball, and I did, and I'm doing good. I'm really doing good. I don't feel any pain, so that's a wonderful thing.
Are you going to get the sneakers that you can run backwards in now?
No, you're not supposed to run backwards. They told me not to run backwards.
Even if you have run backwards. Even if you have the right sneakers, I think
so. I think they just told me not to, and I did it. But yeah, there are pickleball sneakers, which I hope everybody gets, because that helps. It didn't help me, but anyway. Okay, so let's talk about, we got some things coming up. Our tax school is coming up in October, right?
Yep, that's right. It meets twice a week, either in the mornings or evenings. It's free of charge. You learn taxes from A to Z, and again, we can accommodate you in the mornings or the evenings, depending on your schedule. And the hope is, after you're done with the class, that you work this year at the upcoming tax season at one of our 32 offices. And it's a great way to learn taxes, to help others and to even help yourself. And if you're interested, you can go to our website to register, or you can call 632-7886, and Amy can email you a registration form. And I should also say, there's an online version in case you just aren't able, your schedule doesn't allow you to come into class. Although we have found that people are in class seem to do better.
I mean,
right?
you do because you're there. You're getting the feel. I mean, because we don't just talk about taxes. We give the stories and the examples, and how you should feel if this happens, because you're communicating with somebody, and there's body language.
There is. Oh, my goodness.
I mean, when you ask somebody what their child's last name is, or their child's name, and they have to think about it or look for a piece of paper in their wallet, right?
Exactly.
You think to yourself, wait a minute.
Or you look at the body language that the husband has as the wife is communicating with them in that unspoken language, and you can just...
The eye rolls.
pick up so many things,
Okay, and then, of course, extension deadline's coming up.
Yep.
Less than a month away, October 15th.
Right, so if you haven't filed your 2021 tax return, we are ready, willing, and able to help you with that as well. Our corporate office is open on Colvin Boulevard in Tonawanda. We'll make special appointments for you. You can go to our website and find out all that information. And then Road to Retirement, right? Ready, Set, Retire is coming.
Ready, Set, Retire.
Coming up?
Yep, November 5th, first Saturday in November. Those who are thinking about retiring, or those who just retired, or even have been retired, it's a great way to interact with experts in every field that your life will have an impact on, from taxes to insurance, to life insurance, to health insurance, to financial advice, to wills, to estates, to trusts. We'll have it covered for you.
Elder care planning, nursing home, right?
Yep.
And the great thing is, all of these experts come in, are going to do a short presentation, and then they will meet one-on-one with you at no charge to discuss your potential situation. And you might think it's a big problem, and they talk to you and they go, no, you're good to go. Don't worry about it. So, because a lot of times people are worried about something that they shouldn't be worried about, and then some people should be worried and they're not.
Yeah. Right. And the best thing is, this is free. You can get advice for free from all these experts.
Absolutely. So, and then you can go to our website at egtax.com to register for Ready, Set, Retire, or is it Road to Retirement?
It's Ready, Set, Retire.
Ready, Set, Retire. Okay, and we have Liz that's been holding 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And Liz, what can we help you with?
Yes, Esther. I'm glad to hear that you're doing well.
I am.
I'm calling because I'm considering gifting some money to my son who's recently married. I have an older daughter who I actually funded her Roth while she was in professional school for 4 years. So that's grown quite a bit. And initially we had talked about a loan to my son and his new wife, and then I thought, well, maybe I should just, gift an equal amount. So I wanted to know your thoughts about.
How much do you have in mind, Liz?
Well, actually, I haven't checked it recently because of the market. My daughter's IRA grew to almost $100,000.
What did you give her that it was able to grow to that amount?
I gave her between approximately $20,000.
All right, so she's had it for a number of years, right?
Yeah, she's had it for a number of years. So I'm not concerned about that because it's in her name.
Mm-hmm.
I am.
No, but the thing is,
do
you want to make apples and apples? In other words, you gave your daughter 20, she put it in a long-term investment, and it's now worth 100. Or did you want to give your son the 100?
I wanted to try to equal out, so I'm thinking of the larger amount.
Okay. Now, here's the thing. If you gift more than $16,000 per person per year, then are you a married lady or single?
No, I am single.
All right, so that would mean if you were to gift $16,000 to your son, $16,000 to his wife, that's $32,000. And if they had children and you wanted to gift to them, anything $16,000 or under, you don't have to file a gift tax return. However, if that exceeds
I had
the
looked that up.
Pardon me?
She had looked that up, she said.
I was aware of that, and I could actually.
So if
do
it exceeds the $16,000, then you have to file a gift tax return. Now, the gift tax return is really more of an informational return, which is filed to keep track of your assets that you have gifted away, because they want to make sure that you didn't give over. It's almost $12 million, that you don't have an estate over $12 million, because in that case you'd have to pay an estate tax. But if your estate is nowhere near that figure, you do the gift tax return. The IRS keeps it on file, and anytime you give more than that $16,000 figure or whatever they voted in at the time, you probably will never have to pay an estate tax return.
Okay. So would it wouldn't be taxable to me if it exceeded the 16, and it wouldn't be taxable
It's not taxable
to them?
to either of you, except the burden to file the return is upon you because you're the donor.
It also depends on where you're getting the money from. If you just have it in a checking or savings account, you don't have to worry about taxes. They don't have to worry about taxes. But if you're taking it from an investment, an IRA, then we should talk and figure out the tax implication.
Right, because gifting money away is a non-event. But where you get the money from, as Chris is pointing out, is extremely important.
Okay. And any thoughts as a mother? No.
You're a mother. What is your thoughts?
As far as what?
You as a mother.
Well, I mean, I absolutely love my kids, and I would give them the world. And I'm a firm believer in the memories that you can share while you're still here are so much better than the memories after you're gone.
Correct.
Because it's a wonderful thing to say to your kids, here's a leg up on life. And you get to see it.
Exactly. Well, they bought a house and they need to fix it up. And that's when I really started. And we talked about a loan because I would take the interest then as income, which would help me out since I'm retired. But then I thought about my daughter. And
well, so here's the thing. Can you afford to gift that kind of money?
I believe I can, although things are so tenuous now financially in this country.
That's true. You really do have to think about that because
We are on the edge, I feel, right now. So, I don't, wish I had a crystal ball. I'm almost positive things are going to turn out fine, but you don't know.
well, why don't you, there's no charge. You can give us a call. We'll go over your specific finances, talk about how much your income is coming in, what your debt load is that right now, what your age is. Do you have any health concerns? Are you having to pay for health insurance, those kind of things? And then maybe you want to do half as a gift and half as a loan. So, I mean, there's different, or you can do it as a loan and forgive it over a number of years. But again, you're not going to have to pay a gift tax, so you don't have to worry.
And then she might enjoy coming to the road to retirement too. Ready, set, retire.
Oh,
Yeah.
Thank you. And that I am fortunate to have such a dilemma, correct?
Yes, yes.
Yes, that's true. But the thing is, you do have to be wise, though. Wise as a serpent, harmless as a dove. You want to be wise because you don't want we've gone through such a period of prosperity that it's hard for us to think that, wow, things can take a downturn. And you take a look at what's happening to our energy and energy prices and food prices and inflation and the large budget, the budget deficit that the federal government has.
Money.
Those are all things that you have. If you're planning on staying on this earth, those are things that you have to understand. Because once you give away the money and your kids have amalgamated that income, that income that you gave them into their house, they can't give it back to you. So something to think about.
Yes. Thank you very much for your information.
Thanks for calling.
And I will
Mr. Golias, the tax lady from EG Tax.
Thanks, Liz. Sorry, we're on a break.
I know. 8030930, 8030930, star 930 on a cell phone. We're taking a short break. We'll be back on the other side.
Family. I've got all my sisters with me.
Hey, family members, this is Mama. Mr. Golias, the tax lady from EG Tax. We certainly want to help you. If you have any questions, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930 because love to hear what you have to say. Kind of interesting. I was preparing for the show this week, thinking about what to talk about. And I thought it might be interesting to talk about what you should be looking at any stage of life, just like Liz was doing, helping her kids out. But the first stage of life would be when you're an infant. And a lot of times what we do is we shower the kids with gifts and stuff. But I'm wondering if a 529 plan contribution wouldn't be something that maybe a grandma or grandpa wouldn't want to do, or putting money, using that $16,000 in an UGMA account for the child. And the thing is, start building up assets for that kid for the rest of their life, as opposed to giving them stuff. Because we know, I can remember your kids, Tiff and Chris, when they had more stuff than Carter has liver pills. But setting aside money is a really good idea.
It really is, because the stuff, there's nothing you can do with the stuff. It just breaks down, and then everybody forgets about it. It's in the corner and it's tucked away.
Right,
and so,
but I will tell you, thinking about giving financial gifts and putting money into a 529 plan. So what's a 529 plan, Chris?
A 529, that's your college savings account, that it grows tax-free as long as it's used for education. Now, if it's a New York 529, you get a subtraction, $5,000 if you're single, $10,000 if you're married, joint, and you put in that kind of money into the 529 on an annual basis.
Right, and so it can save you money on the state return, and if it's used for education, it's not taxable.
Correct. And you have to age 30 to use it for education. So,
or then what happens?
Then the child can either take it out and pay tax on all that money, or you could switch beneficiaries to a grandchild or
and
a
have
different
it start
child
all over again, right?
Yep.
Mm-hmm.
All right, so that's
and I've been watching.
Just a thought. If you got a brand new baby in your life, just a thought from moving forward, because things are really changing. I mean, the market's having a hard time. Inflation is for real, and it's kind of scary. right?
Yeah, and I've been watching people come in with the 529 statements. The growth is really quite amazing. I mean, they really seem to grow, and so
The only problem in New York State, they only have one fund to choose from,
Yeah.
but there are other 529 plans that won't be deductible on New York State. But let's face it, if you're a grandparent giving money to a grandchild, you don't, because you probably aren't paying New York State taxes anyway, because your pension first 20,000 is tax free on the state, unless you have a federal, state, or municipal pension, public pension, which is completely tax free, and your Social Security is tax free. So many
And then
people
you get
don't
your
have to
standard
pay
deduction
New
on
York
top
State
of that.
taxes. Pardon me, Chris?
I said then you get your standard deduction on top of those subtractions
Absolutely.
too.
Absolutely. Okay, and then let's say you're a young adult. So when you're a young adult, you've just got the world by the rear end. That's what you think, right? You think your parents are your enemy, but they're really not.
No, but it's so
Right?
true. Yeah.
I mean, maybe it's God's way of making them want to leave the house because they really don't especially like you. But
It's very difficult
teaching your
terrain.
young children, your young teenage kids, how to be financially responsible is so important. Like how to have a checking account, how to handle credit, so that they don't go out and ruin their credit. Because credit is so important. That's part of our everyday life. I don't even know of anybody that carries cash anymore. Do you guys carry cash?
Not really.
But I see, I gotta say, I'll be in line at Tim Hortons, and I'm watching, and that person pays cash, and that person pays cash. So, but you see it all the time.
Yeah,
People,
I was just away for work, and we were talking to the people, and they're like, I remember in high school, I actually had to take a course on how to budget and families, and like you go into a course and you got married, and then you had a baby, you had a plan, and then every week you picked out of a hat and there was a different life event. You got fired from your job. What does that mean? You got, you're getting twins instead of one baby, and they taught you how to budget and how to plan
Right,
for life.
And a budget has become, we're just all free and easy. We just, we want the video games, we want the big vacations, we want the cars. But teaching your kids about their credit, teaching them how to handle a bank account, when they have their first job, putting money into an IRA, right?
Yep.
I mean, if they're making the money, I know that your kids never spent their money. They just put it away, and everybody else paid everything for them. But they could have started a pension plan before now.
Yeah. I absolutely.
And then the other thing is setting a goal. I think it's important for you to sit down with your kids and set a goal. And I know how difficult it is when you have teenagers, because it seems like they think you're stupid. At least the one,
I echo your
meeting with
sentiment.
teenagers is they basically think you're stupid till they're through with college, right?
Right. And, speaking of college, how about before they go to college, sit down with your child and say, okay, these were your 3 colleges you wanted to go to. Let's look at the cost. Let's look at all the costs. Your tuition. Oh, here you want to go out of state. Here's the tuition. Oh, room and board. And, this is your financial aid. So if you go to school A, you're only going to be in debt $50,000 when you graduate. If you go to school B, you're going to be in debt $125,000. And if you go into school C, you're going to be over $200,000 in debt when you graduate.
But that almost doesn't mean anything to kids anymore. Do you think, Chris? I mean, I don't think that it really dawns on them till they have to start making payments of $500 a month on their student loan debt.
Well, I mean, if you can teach them the value of money, and again, it goes to the kid who wants to learn and understand things.
And not everybody should go to college. I think, the trades are remarkable.
Definitely.
We do tax returns. The people in the trades, the electricians, the plumbers, the HVAC people have great benefits and great pension plans. And it's a very necessary part of what we need in our society. And a lot of kids are pushed off to college. They're in liberal arts programs, and it's a waste of money.
Oh my gosh, yeah, because they just can't find. I know my older daughter Rebecca has several friends that got liberal arts degrees, and now they're they're doing like exercise classes, and they just can't find a job in that vocation.
Right, because they don't have a specific career.
Right.
Right.
Yeah.
Right. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Our text number is 716-8030930. We have a text, Tiff?
We do. We've got a text. It says, I recently got a letter from New York State saying I didn't include unemployment on my 2020 return, but I never received a New York State 1099. Do I really owe this money?
This is interesting, kind of, because it kind of goes to, I wanted to talk about identity theft. Why should this raise a red flag in your head if you get this kind of letter?
Well, first, did they collect unemployment?
Because New York State doesn't mail out 1099s.
Right, that's true.
Right.
So if they say, no, I never collected unemployment, then you know that's fraud, and you have to fill out a fraud form with unemployment. If you
With
did,
New York State, right?
Yep. If you did collect unemployment, then it's correct. You do owe money to New York, and you better amend the federal too, because you're going to owe the federal as well.
But they did
And
get the
FYI,
exclusion. They got the exclusion in 2020. Some
But
money.
not 2021.
It says 2020 in the text.
Oh, sorry.
Yeah, yeah.
But here's the other thing with New York State. They don't mail 1099s.
Correct.
Unless you call in and ask for it specifically. It's all online, so it's either on the telephone or online, and it's up to you to retrieve the information. They don't provide it without your effort to get it so you can put it on your tax return.
That's right. Yeah, so give us a call and we'll help you sort it out. But yeah.
Right.
Yeah,
Now,
so-
when is you think that somebody needs a will?
When they get married.
children.
When they have children.
Whenever you have assets, right?
Yep.
And I it's interesting because I was having dinner with one of my friends the other night, and she said, yeah, I one of these days I got to do a will. Now, I'm going to tell you, she was on the higher side of being 60, and I said, you don't have a will? And I knew she had assets. But so many times people don't want to do a will, and that would be something in your financial picture you want to make sure you get done, because you want to say where you want your assets to go. You don't want you don't want the state of New York determining that your brother.
We got to take a break for news.
Yeah, I know. Yeah, I know. I have to take a break. I'm Esther Gullius, the tax lady from EG Tax. We'll see you on the other side of the news. Family, we certainly want to help you. I'm Esther Gullius, the tax lady from EG Tax. Our web address is egtax.com, where our school is coming up, our Road to Retirement seminar is coming up, extension deadlines coming up, and
on Monday the Bills are playing, and Chris.
I didn't want to mention that. I don't want to jinx it.
Chris and Grace are going to be there. They're going to have a great time.
Now, and then, Tiff, you've been really successful at Offers and Compromise. Why don't you tell everybody what that's about? If you're somebody that has a bunch of tax debt, they're garnishing your wages, they're going after you, you need to listen to Tiff here.
Yeah, so, the IRS tries to put programs in place. And so if you're somebody who just has a stranglehold of IRS debt around your neck, and you're just lumping around and you just keep paying it and that never changes, or you're not paying it and you get threatening letters, they have programs. You've heard of that program where you pay pennies on the dollar. And it's a program where, for instance, somebody I just did an offer for not so long ago owed $70,000 and they had to pay $1,800 and it was accepted. And you have to pay the $1,800 over 5 months, and then also for the next 5 years you have to be current. So you can't, if you owe, you have to make sure for that next filing period you pay it within the allotted deadline. But there's programs, and so
that's part of what we do at EG Tax. We
Yes.
obviously do tax returns. We help you set up businesses, but if you're behind the 8 ball and you don't do anything about it, I mean, the least you should do is make the call. And national firms charge thousands of dollars to do this, don't they?
Horrible. It's
Tens of thousands, actually.
Yeah. Now
And
I got
our
to tell
fee's
everybody.
very, very, very
It's
reasonable.
doubt to collectability. So if you're somebody who makes $60,000-$70,000 a year, it's not going to work. Or if you have a house, they're going to say, why don't you just get a home equity, or why don't you take a loan against your 401k? It really, you have to be in a doubt to collectability status, and I'll vet it out as you had alluded to when you call.
Right. All right. And then we have Kathy, who's been waiting. Hi, Kath. How can we help you?
There we go.
I think last week I heard now if you take more than $600 out of your savings or checking, you have to, I don't know, explain
Okay, so
it.
here's the deal. If you have a third party pay, let's say for instance, your kids are sending you money through Venmo and they don't properly show that it was a gift that they're sending you, because you're getting more than $600 from a third party, are going to get a 1099-K form. If you have a bank account with more than $600 in it, they also report that to the Internal Revenue Service. So reporting and getting a 1099-K form are two different things.
All right. I take $700 out of my checking every month.
It's not what you take out, it's how much you have in there. So if you have more than $600 in a bank account, then the IRS is notified. Now, they're not going to come get you, they're just notified.
There's nothing wrong with having it.
Right. They're just going to notify you. So many people think that
They're not going to notify her.
the IRS is going to come get them. Not really. This is strictly an information. However, if you're the recipient of a third-party payee, PayPal, Venmo, then you would get, if you get more than $600 in a year, you'll get a 1099-K form, which has to be accounted for on your tax return.
Okay, that's only if somebody pays me.
Right.
Okay, so if I take out more than $600 out of my savings,
You don't have to worry.
You don't have to worry about it.
I won't worry about anything I take out, right?
No, you don't have to worry about it. I mean, the IRS is going to know. But they're not going to call you up in the middle of the night or bust the door down and say, Kathy, did you take $600 out yesterday? No, then it's not like that. But you have to understand that with electronics, we can be electronically surveilled without anything happening. And as long as you're on the up and up and you have nothing to worry about, then wouldn't worry.
Okay, so if I take out $7,000 out of my savings, I don't have to explain what I'm doing with it or anything else.
Like
right?
with the extension deadlines here, there are going to be people taking hundreds of $1,000s out of their bank accounts to pay the liability. It's your money. But remember, the IRS looks at it and says, gee, this looks suspicious. Wow, this was just transferred in from Russia. You know what I mean? But
right.
in your situation, you're fine. Yeah.
Then I don't have to worry about that.
Don't worry about it.
Because that made me really nervous.
No, you're good.
Okay.
Good
question.
question.
Thank you so much.
You're
Esther.
welcome. Thanks
Okay.
for calling.
Bye-bye.
Okay, we got a text here.
We do. The text says, I work at the Rochester airport, and you would be surprised at the people using cash versus credit. Honestly, I'm in line, and I'm just waiting and waiting. And I watch a lot of people pay with cash, too. Maybe it's a sign of the times. Maybe.
Well, but here's the thing with cash. A lot of people think that if they get cash, nobody can trace it. But like we talked about last week with 87,000 extra IRS agents, they haven't had the opportunity in the past to have the manpower to go out and do reconstruction of income.
That's what
But
Chris
now,
just said, Esther,
if
too.
you're in the habit of getting cash and you aren't in the habit of claiming it on your tax return and it's for services rendered, be aware that don't be surprised if something like that would cause an audit.
Yep, Chris just said the same thing when he read that.
I said the times that
They really
people
have. They're changing, really.
Yeah, well, with unemployment, people may have learned to work under the table, and they got paid cash. Doesn't mean it's right.
And with all these new IRS agents,
They're in trouble.
That's right. I mean, it used to be when I first started doing taxes a few years ago, there was a lot of office audits, and the IRS would say, okay, so, and now think about this, that was 40 years ago, and they didn't have Zillow. But now they can look at your house online. They can say, oh, gee, your house is worth $500,000. Gee, that's remarkable how you can afford that. Oh, and you have a registered boat in your name. Oh, and that Mercedes, that's in your name. Wow, and you make $15,000 a year at your business? How do you do that? And so the burden of proof would be on you, the taxpayer, to prove how you got that money. And that's the way it used to be, and I guarantee you that's what's coming down the pike.
I agree. And they're
Crazy.
going to be gun-toting.
Gun-toting guys. All right, now going back to things you need to think about as where you are right now. we were like Tiff was talking about the offers and compromise. How is your credit? Do you ever pull a credit report on yourself? And, or do you just have thrown up your hands in despair and you just don't know what to do? Because there are remedies for bad credit, whether it because of taxes or because of bad decisions you've made. There are remedies. Like, for instance, Dennis Kitchen is a friend of ours and an attorney, and he doesn't specialize in it, but he does bankruptcy. And I think that's because he's non-judgmental. He just uses it as a tool. Bankruptcy, if you're sitting around with all kinds of debt that you're carrying on that you are just dragging each month on your credit report and you're unable to pay, maybe you've had a downturn in your job or whatever, or you just made some horrific decisions, you have no assets, you'd like to move on with your life, you'd like to have a budget, bankruptcy may be something you want to explore. And people say to me, no, I don't want to ruin my credit. Your credit's already ruined.
That's right. Yeah.
And if you don't stop it, it's going to keep going. So that's one of the tools in your tool chest that you might want to think about. And I'm not advocating it. Obviously that isn't something that has happened to me in my life. However, I've had many clients that was the only way that they could move forward, and they're so happy right now.
Yeah, I know on like our Discover statement, and I think more and more credit cards are doing that. They put what our monthly credit score is, which is a really good idea because knowledge is power, and it's really important to know these things. And it's important to pull your credit report to see if there's any fraudulent activities or charges that didn't really occur. And it's really an important thing. I know one of my clients, they didn't get unemployment, and somebody fraudulently stole their social to get unemployment. And so we pulled their credit report to see if there was any other activity. And it's really an important tool that you have,
And if there is that's the whole thing that people don't realize, that if there is activity on your credit that you didn't do, that should be a red flag in your head saying, wow, did somebody steal my identity?
Right. Yeah.
Maybe they opened up a car loan and they're making the payments and it's on your credit and you aren't aware of it until you pull your credit report.
Yeah, and don't be afraid to freeze your credit. People don't know that you can call up your credit bureaus and say, don't approve me for any more credit cards, and you freeze it. And then if you ever need something, you can call and unfreeze it and then freeze it again. So, that's a tool people don't know they can do as well.
I will give you an example. For instance, one of my other clients, his wife was kind of addicted to home shopping and Amazon, and she had the credit card and she ran it up, and it really became a bone of contention in their marriage, and so he froze it. Sometimes that's what you have to do, because to get out of debt is a terrible thing, especially credit card debt, because the credit card interest is 24-25% going up, right?
Right. Yeah. Like 29%, I think, for some of them now.
For some of them, right. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. You can text us at 716-8030930. We're going to take a short break and be back on the other side with some suggestions for your finances.
The bills make me wanna shout, kick your heels up and shout, throw your hands up and shout, throw your head back and shout. Come on now, the bills are making it happen.
We want them to win tomorrow. No, Monday night. Oh, I love the Bills, so we hope. But I'm not going to watch, but I do watch. I do click on kind of sheepishly and see where we are, because
like
I can't
watching
stand
a horror
it.
movie. That's
Pardon
how you.
me?
I said you watch it like you're watching a horror movie.
I'm just.
Josh Allen
afraid.
plays many positions.
Anyway, all right. So looking at finances, if you're somebody that's working, or I just met with a client the other day. She's self-employed. She's doing really well with her business. And I said to her, we got to start a pension plan for you. And she says, I don't know how to do that. Well, that's something that we can help you with. Because if you're self-employed or you're an employee, you want to set aside money, which is going to grow tax deferred and is a tax deduction when you put it in right now, is going to grow tax deferred. And it builds up, over a period of time. God willing, you got to watch your investments. And the thing is, you'll have money when you retire. Looking ahead at a crystal ball with nothing to rely on but Social Security is a really scary thing, because Social Security's got a problem.
Oh, yeah,
Right?
it does. Because they keep printing money to pay for all these other programs. And so it's
And
really
so
got a
if you're
problem.
working and you're not in your pension plan, you should march down there on Monday and sign up. First of all, because there's usually an employee match. Secondly, because it's tax deductible. Thirdly, because it pays for your future. And fourthly, because it grows tax deferred. And in the end, you'll be glad you did. Okay, let's go to Lynn.
Hey, Lynn.
Yeah, my question is, when is it a good time to consolidate all your credit cards into one payment versus taking other action over the long haul regarding your credit
sit down
and
if
just
you
getting
wanted.
out from under debt?
Good idea.
I
Good
would
question.
suggest come on in. There's no charge. We'll do a budget for you. Having multiple credit cards with multiple open lines of credit, that can work against you on your credit score. So, and because it looks like you have a lot of debt that you can access. So, obviously, you'd want to consolidate if you can into the lowest interest rate that is possible. And if you could move the debt to a home equity, it'd be that much better, because it'd be fixed, it'd be low, a low rate as well.
Yeah, and there's a program that they tout where you pay the smallest debt, and then you get that credit card debt paid off, and then you
Cut
use
it up, throw it
The
away.
Dave
and then
Ramsey's.
use the Dave Ramsey, and then you use that amount
To pay off the next one.
the next one. And so, and then also, like Esther was saying, to come in, because when you come in, we'll look at the rates of all of them. So, because some of those store ones like Macy's and other stores, they have really high interest rates. And so you might want to look at also like where Esther gets the bank, the credit union, Pentagon. You can get a loan from Pentagon, a personal loan, and sometimes those personal loans are better than all those high interest credit card rates. So sometimes giving us a call and just running through the numbers is a good idea.
But the other thing is, Lynn.
And then you just make an appointment and just say you want to set up a meeting for a budget?
Sure. Yeah.
Yep. So the number is 632-7886.
But it's so good that you're starting off looking at a budget, because so many people think budget is a bad word, but it really isn't, especially if you want to get out of debt. And who can afford inflation, 27% interest rates on credit cards? It's just scary. So I applaud you for making the move. All right, then we're going to go to Ron. Hey, Ron, how can we help you, sir?
Yes, my brother recently passed away, and he had a vehicle that was a lease, and the leasing company, we called them, they took the vehicle back, but then he got a 1099
C,
maybe a cancellation of debt.
Right.
Is there any way of avoiding having to include that in his income?
Yeah.
Okay, let me ask, did he have substantial assets?
No.
Was he, when you took a look at all of his liabilities versus his assets, did he have more liabilities than assets?
No, he had more assets than liabilities.
How much was the debt cancellation?
I think like $12,000.
So how much was his excess, how much excess assets did he have?
Probably about $60,000.
Oh, well, Okay, you guys want to tell him?
So you said that his assets were more than his debts.
By $60,000.
Is that is that what you said, Ron?
Yeah, that's what he said.
Correct, yes.
Okay, So unfortunately, if his liabilities were more than his assets, he could have done a 982 a form for insolvency, and he wouldn't have to do that. There's an exception in the code. However, if his assets were greater than his liabilities, he regrettably cannot do an insolvency, and he has to pay that debt.
Pay tax on that debt.
Pay tax on the debt.
Okay.
But now let me ask you this though: how much was he working?
He actually had just retired.
So what did he have? Social Security?
Yeah, he got, I think, 1 or 2 months Social Security.
How about his pension?
And he got 1 or 2 months of his pension.
All right, so he had very low income, right?
Correct, yes.
So was he single or married?
Single.
All right, so his standard deduction is going to be, how old was he?
64.
All right. So his standard deduction is going to be about $13,000. So looking at $12,000 in debt cancellation, all right, and his other income, let's say it was another $3,000. After you take off the standard deduction, he's going to have a very small liability, maybe $200 or $300.
Okay.
Okay.
Okay. Thank you very much.
Thank
Appreciate
you.
it.
Good question.
Okay, and who do you have next here?
Two Toms.
We got Tom from West
Tony.
Seneca.
Tony.
Tom from West Seneca. Hey,
Yeah.
Tom.
Hey, Tom from West Seneca.
Hello?
Hello.
Well, let's put Tom on hold and we'll go to Tony. Hey, Tony.
Hello, how are you today?
Good. What can we help you with?
Ladies, I purchased a income property prior to COVID, and over that period of time, it's been unoccupied, and I've put about $50,000 into it. Now, from what I understood when I filed my taxes, I was told that I couldn't claim the money I had put into the home, since there hasn't been anybody living in the home during that period since purchase. Now I'm at a point where I no longer want to continue putting into the home, and I want to sell it. Now, is my taxable amount the sale versus the renovations and the purchase price?
All right, so how much did you pay for the house originally?
I paid around $30,000.
All right, and you put 50 in it.
And I put 50 in it.
So that's about 80, right? How much do you think
Correct.
you'll sell it for?
I've been offered 95.
Will you take the 95?
I was looking for more around 120.
Okay, so let's say 100,000. So you have a $20,000 gain, less your expensive sale. So there might be some title, some tax stamps that you have to pay. So let's say the gain is 18,000. You never rented it out, correct?
That is correct.
So you've held it for more than a year?
I have.
So it'll be a long-term capital gain. Do you have other sources of income, or is this pretty much it?
No, I have other sources of income.
All right, so you're working, gentlemen?
That's correct.
Okay, and are you married?
No.
So your other sources of income would be about how much?
Approximately 80,000.
Okay, so you're going to pay taxes on that 18,000, if it is 18,000, at about 15%. So, and then you have to pay the state of New York as well. So because you didn't depreciate it, it's not a 4797. It's just a sale of capital asset, and you're going to take all your costs plus improvements plus expense of sale and subtract that from the amount you get on the sale. That's going to be your capital gain, and the maximum you'll pay is 20%. It looks more like 15% that you'll pay on the federal, and then the state of New York probably 7 or 8%.
You're looking around $4,000 between the federal and state.
If you sell it for the 100.
Okay.
Okay.
Excellent. Thank you very much.
All right. Thank you, sir.
Great question.
And we got a text real fast. My father does not have a will. He wants to put me as a joint owner on one of his accounts. Is that a good or bad idea? He is not wealthy.
Okay, so here's the thing. If he put you as a joint owner, that means that if it's over 16,000, he has to do a gift tax return, but it wouldn't be taxable.
Right. It's not taxable. It's not a bad thing. It would help avoid probate. The only thing
you want to make sure. I don't know if Dad has a house. Maybe wants to do a life estate. I think it'd be worth a phone call to make sure that we're not planning based upon one little question. So it suggests you give us a jingle. There's no charge. Very happy to help you. But if Dad has a house, he might want to do a life estate. And if he put your name on the bank account, depending upon how it's listed, it could be all considered all of yours or half of yours. So you want to consult with an attorney on that as well.
Yep. And Tom is back on the phone.
Tom is back. Hey, Tom.
Hi. Yes, I have a question about the expanded earned income credit.
Yep.
Last year I wasn't eligible for it. I made $33,000. This year I'll be making probably $27,000.
Okay.
So,
are you single?
Yes, I am single.
No children at home?
No.
I think he's over the top, isn't he?
Yeah, I believe he's over.
You're still going to now. But a way around it is to put money into your IRA. So let's say you made 27, and you put the whole You put 7,000 into your IRA. If you don't have a pension plan at work, that brings you down to 20. That brings you closer to where it's capping out. So you'd probably get a small earned income credit. So that at least that would be a way to rob Peter to pay Paul, so to speak.
Mm-hmm. That sounds like a great idea. So what is the cap? What is the limit?
Off the top of my head, I don't know because they just changed it. But if you want to call the office on Monday, we'll have it at the front desk for Amy, and she'll tell you.
Okay, great.
Okay.
Thank you very much.
Thank you, sir.
Okay.
I'm Esther Gillius, the tax lady from EG Tax. You can go to our website at egtax.com. If you want to sign up for tax school, go to our Ready, Set, Retire seminar. If you want to set up an appointment to do budgeting, you want to do your tax return for 2021, the deadline is approaching. We're here. We answer questions. We talk to people. We want to help, and we're glad you listened, right?
Most definitely, most definitely. We're here to help you. Never feel like you're on an island all by yourself.
That's right. And believe me, if you're getting tax tips from friends, you need to double check on the tax tips from friends, because they can really lead you down a primrose path. It's best to talk to an expert. So I'm Esther Gillius, the tax lady from EG Tax. Let's go, Bills, and have a great week. Thanks for listening. Bye-bye.